the comments by Draghi are more ambiguous, so the movement will be more erratic, and so we may have a choppy mode. So pay attention to that. Okay. What I'm going to do last week or last Thursday, I will draw here a level where I would like to see my minimum profit. So 12 pips plus the spread, so 15 pips. 15 pips, so it will be right. 15 will be right here. And so I want to have an exit price level for my MX on this level or above. And you can see that now the price has moved above that level. So this is a good point for me. And in the meantime, you can see, because my stop loss was, okay, I will make an MX here now because we have another exit setup. So MX right on the level I have decided. And so I have my MX here, MX1, with a minimum of 12 pips, because I have indeed 15 pips minus the spread, so 12 pips, okay, which is right half of my stop loss. So my profit is enough, so plus 12. And of course, because 3 level of resistance was below this gray tiger tunnel and below the blue pizet level, you can see that the tiger tunnel is upward because the home base is upward. Now I can also adjust my stop loss the same way on the same level, in fact, so still below the gray tiger tunnel, and I have 1, 2, 3 level of resistance. The price here seems to be just below the mid tiger tunnel, so this mid tiger tunnel cannot be considered as a level of resistance, and so my stop loss will be here, giving me a risk on that stop loss of how many pips for this entry. So 13 pips plus the spread, so 17 pips. 17 pips minus 12, this means that the risk on this position is only 5 pips. 5 pips, okay? And so let's see if the price will resume now upward. Now I will keep that blue level in order to decide where to make other entries or exits. When we trade with the CRB chart, it's always interesting to check what is happening on the time bar chart. Okay, and so let's see what is happening. So the price has the possibility to reject the tiger tunnel, but we have made an MX, so we are left with one opened unit. On the euro US dollar, the price is also going upward globally, so normally we are oriented in the appropriate direction. Let's try to see where is the next max price level. Oh, it's far, far away. Oh, yes, we have plenty of plays here, 90 pips. And with each candle, if we can reduce the risk on the trade, you have to do that, okay? Because we know that the global risk for the trade was 5 pips globally. Now, if we can reduce the risk by a few pips, how many pips here? You see, 3.5 pips. So this means that now the risk is only 1.5 pips globally. On my second unit, we have 10 plus the spread of 13 pips, 13 pips minus 12 for the profit of the first unit. So my risk is only 1 unit, 1 pips. This means that I am virtually break even. And so this is a risk-free trade. Now, if I want to make it really a risk-free trade, because I have to adjust my stop loss by 1 pips or 2 pips if I want to be break-even plus 1, I can adjust further my stop loss by 2 pips. This is not really a problem. But I like to respect my rules, and so if the price, for example, here closes for 1, 2 bars or more above the mid-tiger tunnel, that mid-tiger tunnel will become a level of resistance. The green tiger tunnel will be the second one, and the mid-tiger tunnel between the gray and the green tiger tunnel will be the third one. I can further adjust my stop loss between the gray tiger tunnel and the mid-tiger tunnel in in which case my second unit will be also in profit. But now with more bar here, we can see that the gray tiger tunnel has moved further upward. I can adjust further my stop loss. How many pips? We can see that immediately. 2 pips. Now I am break even +1 on the second unit. And so this means that I am risk-free with that trade. If the price hit that stop loss quickly, and my exit is executed on this price level, I will make just 1 pip profit. So I am in a risk-free situation, okay? The risk is indeed 8 pips with the spread, 11, but 12 pips of profit on the second unit, so I am risk-free. We have to pay attention to something else, because you could ask, okay, in such a context, can we make a scale-in? Normally, when we have such a circumstance with globally a positive comment by Draghi, and the trend is clear, when we have an opportunity for a scale-in, we can scale in. But look here, what we have here. The VNE is almost in the critical area. If I widen the zone, you can see all the elements are almost above the 60% level, or very close to that level. So this means that now the movement become risky. And so when we are at an extreme VNE, making a scale-in becomes extremely risky, mainly when we are here in a trade which is virtually break-even, because the scale-in will add a risk to the position, and if the price retraces because it is at an extreme level before resuming possibly the trend, the trade which is risk-free for the moment can become a losing trade. And so the rule is, when we have seen the VNE at an extreme level, don't make scale-in, simply. That's as simple as that, okay? And we have, of course, to check also on the 5-minute time frame, because we never know what may happen. If the price retraces too much, we can get the movement invalidation. And so we have to pay attention. These trades are risky trades with the ECB, okay? And it's very possible that our stop loss will be hit here. And so this may be possibly the exhaustion of that movement, okay? Let me extend the stop loss here just to show if the stop loss will be hit on the bid price. So we need to see really the price hitting that price level to have the exit, because it is a long trade, and so opening a long trade is equivalent to buy. So the execution here is made on the ask price. So the real entry is 3 pips above, and the MX and the XXX are equivalent to close, to sell, and so they are made on the bid price. Now, of course, when we are in the context of a true trend and we see the VNE at an extreme and the green line crosses down the yellow line, the blue band, and the 60% level, we can make an XXX. And so in this case, the XXX could have been made, let me see here, on this candle as the setup bar, and then the exit been made here, in this area. But making an XXX so early when the VNE is at an extreme, usually it's too early. Too early. Should the extreme last for several bars, then when the green VNE breaks down, then making an XXX is good. With such a steep angle as seen in the time bar chart, we could expect, of course, an important retracement. And by how many pipettes? So the low was at 129.578. My stop loss, so 578. My stop loss is at 570. So 8 pipettes. The low of this blue candle is 8 pipettes above my stop loss. So for 8 pipettes, we are still in the trade. And if the price comes back, I will reduce a little bit my line here, because with CRB chart, if the line is extended on the present candle, for each new candle, the line is also extended. And so this may be sometimes disturbing. I will move that horizontal line on the stop loss level. It will be easier to see. So here at 7.0. Okay. And let's see if the price will hit. So you see, taking into account all the elements we were seeing on the chart, we knew that the movement could have been limited, because we are in the context of a true trend, but with a very steep angle, and in such a case, we know that most of the time, that movement will not exhaust inside the red magic box, but before the red magic box. It may resume after, for example, during the second half of the US session. This sometimes happens. Okay, and now the price has hit the level, and so here we have had plenty of time to make the XXX, because we have seen the price has attempted to cross the blue line several times. So normally we would have the time to click on the XXX button. So here we know that we have our XXX, and so this trade unfortunately has not produced an interesting result, but at least we were controlling the risk. Okay, and so I can even write XXX1 that way, and so we know that we were at +1 pips. So no, a little more. So let's say 7 pips. Let's consider a small slippage, -3 for the spread, so +4. Yeah, we have been able to adjust the stop loss. So +4. So a small profit, but this is the difficulty trading the ECB. And so we can mark the chart. So trade 1. So +16 pips. The ESL was 24 pips, I think. Yeah, 24 pips. This means a rework to risk ratio of +0. I think it should be 40. Let's see. 16 represent 2/3 of 24, so 0.33. Let me check carefully. Where is my desktop calculator? It's here. So we have 16 divided by 2 and divided by 24, 0.33, indeed. And because the news has been not negative for the euro, somewhat positive, I will not take the risk to go short in this movement. So I will not take the risk to take a short setup, because I consider that the movement will be very limited. We may have some attempt to resume the up movement. Okay, any questions about what we have seen today with this special context of the ECB? And you can see we have exactly the same type of behavior with the euro US dollar. So you can see that when you understand the context of the event, and you are extremely accurate and fast in your decision, and you pay attention, a strict attention to the trade risk management, even when we know in advance that the movement can be limited, simply due to the guideline we have. So context of a true trend, but with a steep angle. We are now at approximately, what time is it? 1 hour approximately before 1 hour and 1/4 before the beginning of the red magic box, we know that in such a case, the movement exhausts earlier. And so we're exactly in that situation. So we knew in advance that that movement would have been limited, and we were seeing the risk here in the Vinini. Okay, so be extremely accurate, be fast in your decision, and pay attention to the trade risk management. And in this case, in particular, whenever you have the opportunity to reduce to adjust the stop loss, even by 1 pip can make the difference. We have seen at the moment that we were at -5 pips, then -3 pips, and then +1, and then +4. Okay, by paying attention, almost bar after bar. There are a lot of critics about using EMAs in trading because they are lagging indicators, but and this is indeed a disadvantage, but they have also an important advantage we can exploit. It's even when the price is making a retracement, like it was the case here, you see the home base still goes upward, and so the Tiger Tunnel. And so this means that the EMAs are also somewhat resilient to some pullbacks, and we can use that resilience in order to reduce the risk. And so this is, I find, I believe, an excellent way to exploit the fact that some indicators are lagging. So the lag of the indicator in this case is an advantage. Now here what we are seeing that the price has retraced to these max price level, which is a zone, in fact. The distance between these two levels is only how many pips, if I may have. So here you see 9 pips. So this means that this is the same area in reality. Look how the price came close to that level here. Look how the price went into the zone. Look how the price went into the zone here, how the price posed into the zone, close to the zone, and so here inside the zone. If the price comes back and breaks above the zone and we have another long setup, the extreme situation has somewhat disappeared, we can possibly exploit another short-lived long trade, but don't expect to have a big movement. Okay, it will be still a risky trade because if you look at the time bar chart, the price has not retraced enough for that upswing. Okay, but with some momentum and with the maximum, if we have a valid setup, the price can still move further and give you another trade, not necessarily a big one, a small trade, but the combination of the two trades, if the second one is positive, of course, will give you an interesting result. Let's see that we still have a few minutes, so let's see that if this will happen. Now, if you don't fear to trade with a 2% risk, this means that such a trade has given 1/3 of 2%. This means 0.66 R profit, more than 0.5% profit, with a trade having lasted a few minutes. With a 1% risk, you still make 1/3 of 1%. I remember that if you are able to do every day, to make every day an average of 0.5%, and you trade every day of the year, at the end of the year, if you make no withdrawal and if you compound your result, you will multiply your account by 3, with 0.5% per day. And the 0.5% result can be made in one trade or in several trades. There is no need to make it in one trade. So here, let's see if we will get another entry setup, and you see if this is the case, we will be again above the max price levels here, which is positive because this now is a support level or a demand level. Okay, we have the setup here. Now the green V is pointing upward, so a potential but a risky trade. So I advise you to not take such kind of trade, but let me explain its possibility. So is to consider now an entry in this area approximately at the same level as our red PZ level, and the stop loss should be 1, 2, 3 levels, so just below the home base channel. But it is a risky trade, okay? So don't take it if you don't feel comfortable with risky trade, and the stop loss size will be around, so again, 24 plus 3 for the spread, 27 pips. So the entry would be somewhere, so here. But it is a risky trade because of the M forming. And because this is probably the exhaustion of this up movement, this add to the risk aspect of this trade. This is why my advice is to, if you get somewhat frustrated with a losing trade, you don't need to take such risky trade. Okay? Okay, you see here the entry would have been made. Now let's observe what the price will do. Will we get a small up movement allowing us to make a small profit? So I will still mark the chart just for the exercise. That way, so I have set 27 for the stop loss. So ESL 27. Now, when you know that the trade is more risky because of the counter indication we have here, and you want to take the trade, then be extremely cautious for the trade risk management. And my advice would be handle that trade as a trade in a choppy mode. If you consider the time bar chart, we cannot say the price is in a choppy mode, but we know that when we have risky trade, we can trade them as if the price was in a choppy mode. Okay? And so you know how to handle a trade in a choppy mode. So if the price moves fast enough, I will simply make a recap on how to do that. Now, personally, even in a choppy mode, I make my first MX only if I get a profit large enough. So 13.5 pips plus the spread, so 16.5 pips. So here, 16.5 pips will be coincidentally just above the green ETF. Okay. So this is my minimum MX. But as you know, in a choppy mode, when you have an exit setup, you can take it. So this candle will be most probably an exit setup, because if the trade in a choppy mode ends as a losing trade, making systematically your first MX here, even if with a small loss, you will mitigate the global loss of your trade. Okay. But this is not what I do. I prefer to have a full loss on the stop loss and still keep making my first MX on my minimum level. Okay. But as I have said, so you don't have to take such risky trade because the context is now more risky. And here the MX would have been made most probably. Yes. Just below this level, not yet, but and the price comes back. So let's see if it will succeed to push up to that level here. So the price comes back. Of course, we cannot guess in advance, of course, that the price will come back. But the global context is positive. So we may have, whenever we have a very steep angle and then a correction, we can see some attempt to resume the movement. It's not sure the price will succeed to reach the previous stop and break the previous stop, but we can have some push, and then most probably the price will consolidate for the rest of the day, or at least for the rest of the European session. And we may see perhaps some movement during the US session. And in such a case, of course, you need to be extremely patient. And this is still a risky situation because look, the RSI now is making a third leg of an M. This will be a nice M. Okay. And very, very often when you have such a counter indication after an important movement, so this is a nice representation of a big risk in the trade, and the best decision very often is to skip the trade. And you see, this is again an exit setup bar. We have the M being formed, but the price doesn't seem to follow through. And so most probably we will have a fourth leg in the M. I have seen situations with 5, 6, 7 leg in an elongated M, with the price staying in the same area. Now, if we have an M with many legs, but the price at some point goes very high, we cannot longer consider it is a very elongated M. It may be perhaps 2M, 2 successive M's. Now, if the price succeeds to stay above the Great Tiger Tunnel here, we will have one, so here, 1, 2, 3 level of resistance, but the two Great Tiger Tunnel are very close together, so we still have to adjust the stop loss behind the blue pivot level, of course, so I will be able to adjust my stop loss below this pivot level. But for that, I need to see the price above the second Great Tiger Tunnel. And this will help to reduce the risk at around, let's say, 14 and 17 to 18 pips, so by a good 1/3. And even more because the pivot level continued to go upward. Okay, the price has closed above the Great Tiger Tunnel. I would like to see a second one before adjusting my stop loss. Now, when you are in such a choppy mode, okay, and you know that the trade is short-lived, most probably, when the price reaches here my minimum level for a profit, I don't wait for an exit setup bar. I take my profit. Of course, in this case, the price has not moved enough for me to make an MX. But if the price comes back and hit this level, I will consider to make an MX, because now adjusting the stop loss in this area, this would leave a risk on the second unit of only around, even not 7 pips. Okay? And so the trade will be again a risk-free trade. So 1, 2, 3. So let's adjust the stop loss now. So here in this area, below the third level of resistance. Okay, I take my MX here. We are in a choppy mode. I know that. I know the context is risky. I don't wait for an exit setup bar. I make my MX. Okay? So MX 1 here, and banking around 30.5 pips. Indeed, we have so 16.5 minus 3, so 13.5 pips. So 13.5, which is exactly half of my stop loss size. Not 113, of course. This would inflate the result of the trade. And you can see that the risk now on the second unit, I can even tighten further the stop loss here. The risk is only 3 pips plus the spread, so 6 pips. 6 pips. I have a minimum of 7.5 pips profit on this trade. Okay? You see, this would have been most probably an exit setup bar, but giving me an MX not large enough. But this is a discretionary decision, knowing that I have to handle the trade as in a choppy mode. Okay? Otherwise, you can see that we have a very nice elongated M here, and so if the price follows through, if you strictly follow the rules of the market, you have to make your MX. Now, let's see if we can make a little further on that trade. We'll wait some more minutes, if you don't mind. Where is the mid-Tiger tunnel here? The distance between the two is 16 and 8, so 8 and 4. 8, 4 was right here. You see, my exit also corresponds to a mid-Tiger tunnel rejection. So here we had, let me draw that, we had the mid-Tiger tunnel rejection somewhere here. You see how things combine nicely. And you see such kind of thing when you have more experience and you make some measure on your charts. See, now while the price is pulling back, our gray Tiger tunnel still goes upward. I will adjust my stop loss without any problem here, reducing the risk on the second unit by how many pips? 2 pips. 2 pips is 2 pips. The risk on the second unit now is only 1 pips plus the spread, 4 pips. 4 pips. Okay? I am almost break even with my second unit. Now, the store RSI has given the exit at a bar. The green V is making a top, but because I have made an MX, I don't make the second close, of course. We are in the context of the same top here. Now, remember, we have to handle the trade as in a choppy mode. Okay? On the first unit, I have made plus 13.5. We are in the second scenario of a choppy mode when the profit of the MX is between 10 and 15 pips. In such a case, I have to adjust my stop loss at minus 13.5 plus the spread. So at minus 10.5 plus 1 to be break even plus 1. So at minus 9.5. Minus 9.5 would be in this area. Okay? In such a way that the global trade is break even plus 1. Of course, because I have already adjusted my stop loss at a better level than the break even plus 1, I keep my adjusted stop loss. Okay? Now remember, should the profit be larger than 15 pips or more, you would have to adjust your stop loss for the second unit at break even plus 1 for the units. So in this case, 4 pips above the entry price level. But we were not in that context. I do not expect for that movement to be a very large movement. This is why we are in the second scenario, and I accept to have a loss or to be break even, to have a loss on the second unit in order, in the worst case scenario, to be break even for the entire trade. But we know that the trade will be profitable because the risk on the second unit is only 4 pips now. And with the with the home base and so the gray Tiger tunnel continue to move upward, with each new bar I can further adjust my stop loss here. I adjust my stop loss by how much? Perhaps not 1 pips, almost 1 pips. Now I am virtually break even with that break even, except for the spread, of course, with that unit. And you see, in fact, the trade risk management approach is really very, very tactical, and it's a fight pip by pip in order to secure your trade, even in difficult circumstances. Because such kind of context is not so easy. you have to understand clearly what Draghi has said, and this is not an easy exercise. It takes time to understand how Draghi or any of his colleagues try to possibly trick the market. Let me adjust the line exactly on the stop loss here. So at spot 556, and the low of this bar has been 559, 3 pipettes above. So no exit. And now we have the XXX, and we have indeed plenty of time to do it. So here I will make my XXX. Okay? And indeed the price. So here XXX, and it will be the XXX number 2. And this is break even, okay, minus the spread. So we lose only the spread, so minus 3 pips. And don't worry if the price seems to resume the up movement. We know that the movement now will be limited due to that global context of a steep angle in the time bar chart. And then we can annotate our chart with the trade number 2, which is also a positive trade, a small one, but we knew that in advance. So trade number 2, so we have 10.5. 10.5. The stop loss was 27 pips here. And so this means a rework to risk ratio. How much? So we take 10.5. It will be a small one, of course. 0.19, 0.19 R. But this is enough. You see, when you add now the 2 rework to risk ratio, 0.19 plus 0.33, 0.52. You have made more than half our profit on 2 trades. And with a 1% risk, which is a small risk, you have made your 0.5% profit. Okay? And with a 2% risk, you have made your 1% profit.